Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Hello and welcome to the Finovate podcast. We are continuing our series looking at the FinovateSpring Best of Show winners. And joining me today, we have Gwyneth Borden, founder and CEO of Remynt. Gwyneth, thank you so much for joining me today.
And thank you so much for having me. It's exciting to be here.
So, as the listeners have heard me over the last couple of weeks, you can find all of the demo videos from Finovate up on finovate.com/videos. Remynt's video is up there. It's a really terrific demo. It's very captivating. But Gwyneth, for people who haven't had a chance to see that demo video, can you start with just a little bit of background on yourself and Remynt?
So Remynt empowers consumers to rebuild credit while resolving delinquent debt. What does that mean? That we are a debt buyer and collector, buying non-performing charge-offs or also collecting on them on contingency from banks, credit unions, and fintechs. I kind of got into the space in a way that you would not expect. I kind of came in from a vantage point of having experienced delinquency and charge off and looking at everything that's wrong with the process of the way debt collection work and how the incentives are misaligned between what the creditor or debt buyer would like and what the consumer needs.
Yeah, I know it's a really interesting platform. And I will say, at the start of this, it is exceedingly rare for a company in the debt collection space to win Best of Show. So obviously, that's a really strong indication that you're doing something that's really unique and that's resonating with a lot of people. We don't need to have a recap of the entire demo video, but can you give us a little bit of background on how you approach things and why you think that approach really resonates with people?
Yeah, I mean, of course, if you look at the economy right now, charge-offs are the worst they've been since the Great Recession. Credit card debt charge-offs went from $22 billion in 2022 to $42 billion in 2023. So debt is large, and it's kind of top of mind, I think, for a lot of financial institutions, which are seeing great losses, but also realizing that traditional approach to debt collection is not working. It's still primarily letters in the mails and call centers reaching out to consumers, which doesn't align with the world that we live in today. And I think that's what really resonates. I think we were really focused on three things. Is like the broken call center model doesn't work. People would want a digital first approach. We are digital first, but not digital only. But the idea that most people feel a lot of fear and shame in the debt collection process and would rather go online and resolve debt on their own terms. But the challenge often is, even when there are portals or inflexible payment plans or types. And that's one of the things where we innovate in, where consumers have the agency to set their payment plan and type. They can do a payment plan. It's still a full repayment payment plan, but they can set it on their own terms, choosing weekly, biweekly, or monthly, and starting with as little as $10 a month. And then finally, I think the other thing related to that is inflexible payment types. Believe it or not, for a lot of younger consumers or consumers who've had issues maybe with overdrafts, they're not just using traditional banks. You've asked people what a routing number is, they don't know what it is. And so we take peer-to-peer payments as well as debit and bank, of course. So we really meet consumers where they are. And then the final, I think, real missing piece, and I think banks are really trying to figure this out around this point of customer resiliency, right? All these customers that fall off at this point, people would like to recapture them in the future, but how do you help promote resiliency? And so Remynt's program overall is a credit reaffirmation opportunity that by repaying debt, you can actually rebuild and earn new credit with some other benefits as well. And so it is actually a real pain point, particularly in the charge-off space, that repaying debt doesn't rebuild credit. And it really doesn't lead to better payoff levels because it doesn't do that. And so I think we really solved that problem, both of like a greater incentive for better repayment, but also then the resiliency question with their credit opportunity. And then we also have personal financial management tools and credit scores built into that.
Yeah, no, as I said, really, really interesting. And we're going to talk a little bit later on about that mechanism by which users can rebuild credit, because I think that's a really crucial piece. The other piece that I think comes through really clearly, both in watching the demo and listening to you speak about it right now, is, there's an emotional component to this, right? And I think this is one of those areas where emotions are very high. To your point earlier, this is something that is people have a lot of shame about. They have a lot of guilt about. They want to try and avoid some of these negative feelings. And ultimately, what that does is it makes it really difficult for anybody to come in and engage with them in a productive way, And one of the things that's clear is you spent a lot of time not necessarily thinking about the banks, although certainly that's an important piece here, but you spent a lot of time thinking about the people who are actually in the process of defaulting on debt. Can you talk a little bit more about what you've learned about that group, and how that learning has impacted the way that you've set up Remynt?
Yeah, I mean, generally, people who come to this situation, something happened in their life. Maybe they lost their job, they didn't have the hours that they wanted. Maybe they were always kind of living beyond their means. And again, something's happened and they've fallen off. These people typically have more than one debt in arrears, and they're really trying to figure out how they balance repaying these various debts with also like their day-to-day living. And then now they're being inundated with calls from various debt collection agencies seeking payment from them. And it's not as if you can answer the phone and say, hey, I don't have it today. I'll call you back next week. That's really not how it works. And so, of course, that then leads to avoidance behavior, where by and large, people they kind of got in the situation because they were perhaps avoiding the circumstance. But so now you have a situation where people are pursuing them, and feeding into this fear and shame aspect, and they're just avoiding them. Nowadays, it's very easy with cell phones to silence unknown callers and to ignore them. And so it's really thinking about from the vantage point of the consumer of what really drives them to want to repay a debt. And like by and large, consumers you talk to, they want to repay their debt. They know they owe this money and they want to pay it. It's just that typically the biggest point of friction is the payment plans and options being offered don't suit where they are. And so one of the things that we built into Remynt that was very unique is a hardship option. Someone can indicate that they're having a hardship. We ask them to indicate the kind of hardship they're having, and then we ask them a bit about the other debts because we are trying to put together a better financial picture of who this customer is and how they got there. But this is really important because it gives people that sense of like goodwill and relief because most people, when we were doing interviews specifically, said, I felt like betrayed by my creditors. I had all these credit accounts and people were just giving me credit and things were great. And then when I kind of fell off, they hated me. And I just don't know where to start. Like, I don't know where that starting point is. And if you choose an option like debt settlement, that devastates your credit. So people are often looking for an easy way to start. And we really thought about Remynt as that path, that the one debt that you can start to handle, and then by providing the tools, and then also a community on Discord, which is where we really focus in on the opportunity to connect with experts and peers, so then people can talk about these psychological and emotional effects. Because money isn't just about budgeting. Most people have budgets, but they don't keep them. It really is about whether it's social media, family upbringing, other things in your life that influence how you spend and how you respond to money-related situations. And so you can't overlook those things if you're really trying to change behavior and support people.
Yeah, no, absolutely. And anybody who's listened to this show will know I've been beating the drum for a long time about, I think the single greatest failure of the fintech industry so far has been a failure to really take into account the idea of people as emotional animals. And a lot of the fintech industry comes from a standpoint of, we're really good at math, we're really good at setting up systems, and we're really good at coding things. And when you have something as variable as how a human being responds in an emotional way to a situation, a lot of times this can be really perplexing, really flummoxing to people who are inside the fintech sphere. And so looking at it from this standpoint, it's not difficult to see how all these emotions that you're talking about can create a really kind of self-fulfilling negative spiral. The question is, and how can you go about it and change that? And here's where I think I really want to talk more about this idea of users being able to rebuild credit, because now you're basically saying, hey, here's a way out of this spiral. Here's a step that you can take, which not only is going to solve your immediate problem, but which is going to help you kind of get past some of these negative emotions and start thinking of yourself in a different way. Can you talk a little bit more about how exactly that credit rebuild process works?
Yeah, so this was a really key thing because in interviewing people who didn't pay a dime of their debt, right? The overwhelming reason that they would repay their debt, 56% of them said, these people paid nothing, by the way, that they would fully repay their debt to get credit. To be able to rebuild and get new credit. When the Federal Reserve does quarterly surveys of consumers with subprime scores, the number one reason that they are applying for credit is to build credit. Credit is the underpinning of our entire US financial system, and having a good credit score is everything. And you don't realize how important that is until you've ruined it. And for people with severe delinquencies and charge-offs, their score has tanked from the moment of the first delinquency to the charge-off. And if they have another debt collection agency that opens up a trade line, it completely devastates their score. It doesn't matter how much debt you have. It's just having one really bad account or can really hurt you. Your score can drop as much as 200 points. So this is the thing that people are looking out for, because all of these people want to build credit. That's why a lot of them turn to the very kind of scammy credit repair industry that's now grown to be a $4.3 billion industry that will promise to fix your credit, fix things that you legitimately didn't do well, for money, which of course they cannot guarantee and actually don't deliver on. And so thinking about that as the nexus of like, okay, people want to repay debt, but they also want to rebuild, and there's no way to do that. And so what our program is a credit reaffirmation product. So if consumers opt in to a full repayment plan, we open essentially a credit trade line so that as they're repaying their debt, they are rebuilding their credit in the process. This trade line is actually attached to a charge card, which eventually they'll have access to after full debt repayment, but not before then. It's a charge card specifically because it's not a revolving debt credit card, so it would have to be paid in full each month. And the initial credit limit is 50% of the balance they paid. So if they had a $1,000 debt, they paid $1,000, then their credit limit would be $500. And it's just a starting point for them to rebuild. We thought this was really important because, again, it's the number one need that people have that the current ecosystem does not solve for them. For many people who are struggling to rebuild credit, they find themselves in a cycle of predatory short-term loans, high interest rate loans, getting car loans that are like 30% almost interest rate. And so really kind of providing that pathway as an incentive, because ultimately that is why people are resolving their debt is, yes, they want to get out from under debt, but they actually do really want to rebuild their credit. And so we think this is very key. There have been historical examples. Many people don't know that this is actually how Capital One built their business back in the day, partnering with a very large debt collector buyer that had a lot of stale debt, so debt beyond the statute of limitations, and offering basically to put all that debt onto a credit card. And it was a very successful business. It actually was a $100 million business 20 years ago. So, we know that there's precedent in this area to do that. And we feel like this is the right time and it's the right product. And it's really speaking, that is reception that we're getting from banks and credit unions and others. And then when we actually surveyed consumers, we were able to do a wait list pretty quickly for people who would love to have this product.
Sure. No, I mean, again, that's not a surprise. So talk to me about the financial institution side of this, because, obviously the end users are one piece of it, but you also have to engage fruitfully with, banks and credit unions of all sizes. Can you talk a little bit about how they fit into the equation, where kind of the handoff is between Remynt and your financial institution partners?
Yeah. So, I mean, we work with financial institutions a few different ways. One is we can just buy their debt. Like they have portfolios they don't want to work with, we could buy it. We can also do a pre-offer approach. So say you're not really sure, right? You've never done this before. A lot of credit unions haven't historically sold their debt. So maybe we do a pre-offer approach where we send out, hey, you pay your debt, you can get this Remynt credit building product to their non-performing delinquencies. We pay the bank a predetermined rate based upon those who opt in. Now they've offloaded some people on their books. We would pay them a higher price than normally they would get because these people are opting in. Then we can also do contingency, which is the more traditional relationship where we collect on behalf of a creditor. And then finally, we do have a white label approach where if you want to have an extension to your collections arm, this digital first approach that really does enable people to go online and resolve debt on their own terms, you can take advantage of. But it's really interesting in talking to financial institutions because there's such a realm, such a range. Like some of the bigger organizations, they don't have such a, you'd be surprised to know that they don't have such a huge strategic approach around how they deal with their charge-offs. They might sell them. Many of them do sell them, but they actually don't necessarily have a strategic approach for the types of organizations that they partner with. They have like a huge vendor approach where they kind of spread the debt across various vendors. A lot of times people don't know a whole lot of information about this population of consumers because concerns about credit discrimination and others. For credit unions, a lot of them are finding that they have a lot of old historical relationships with collectors that are not yielding the same results that they would like to see. I mean, across the board, a lot of people are seeing that, but I think there's much more conversation, especially with the emphasis on deposits and maintaining customers and becoming top of wallet and all those sort of things. I think people are thinking much more creatively about how do we work with people who are really in distress, but also be able to re-retain them when they're in a better financial position. And so that's what we are starting to hear a lot from banks and credit unions and community banks, that they're really interested in that process of how can they bring them back. Some are interested in actually doing their own credit reaffirmation product, similar to, basically using what we're doing. But many of them are really starting to look at these customers aren't so disposable as we used to think
Yeah.
of them, right? And that they want to really figure out how to recapture them. But there's also more of a focus on resiliency. I think so many banks and financial institutions realize that, financial literacy isn't taught in school. Most people don't have a firm knowledge around credit or debt and how to manage it. I mean, when you even look at a category like debt consolidation loans, like the number one reason people take out personal loans is to do debt consolidation. You can't get a debt consolidation loan with a poor credit score. Typically, you need a credit score closer to 700 or higher. What's fascinating is that most people who take out a debt consolidation loan 18 months later are in just as much debt as they had been 18 months before they took out that loan. And so I think more institutions are seeing people really need help and guidance around finance, but there's not a really easy way to get to them. Most people aren't that interested in what their bank is, every once in a while trying to tell them. So this notion of us being really focused on resiliency, the personal financial tools, and the community, I think also really resonates because I think people are trying to figure out how do you crack that nut around greater financial resiliency.
Yeah, yeah. Well, and certainly the idea that, if you want to create customer loyalty, you need to be there for your customers when they are having a difficult moment, is I think a really easy one to understand. And then, of course, the idea then that they become really worthwhile customers down the road is obviously, again, a very simple one to see. It amazes me how often I talk to bankers who can only see one side of the equation when they say, how come our customers aren't loyal to us? We feel like they should be loyal to us, but we see them leaving us to go and open a new account with an online lender or online account opening kind of situation, or moving money into a different, newer fintech bank, something along those lines. And my response to that is always, well, what have you done to deserve your customers' loyalty? And here's a way where you could think, I'm actually with you. When you have a difficult situation, I'm with you. I'm going to help you through this platform. We're going to make you into a more resilient customer. And now all of a sudden, I've got this relationship that I can then count on when, I'm in a position where I'm not able to offer the same interest rates that an online savings account is able to offer. My customers still think of me as their bank because of this emotional connection, which is obviously a really crucial piece as everybody's trying to fight for the same limited number of potential customers that are out there. We have time for one more question here, and it's a fairly straightforward one, although it's a little bit of a blue sky question, and it's simply, what's next for Remynt from here? And a follow-up question, how can people reach out to you if they're interested in learning more?
Well, wonderful. First off, they can find me at Gwyneth at GetRemynt, GETREMYNT.com. You can also go on our website, GetRemynt.com. And we would love to talk to anyone like creditors of any type who are interested in partnering with us. That would be wonderful. If you are an organization that's doing something interesting in kind of the financial support space, because part of what we want to do is offer additional resources, non-predatory products, not through a sales kind of approach, a marketing approach, but a way to be able to help our consumers, because we know that they're going to need more than one good account to improve their credit, so they can do that. I think for us really is about scaling and really showing that this approach works. I think there's so much to be changed about the way that we go through the process of debt recovery. I mean, I always say that we are creating credit recovery, which does not exist. Credit recovery, if you Google it, refers to college or school credits. There's no such space because there's no space like it. There's this credit repair, as I mentioned before, which is not a very good space. And so this whole notion that people start to think differently about these consumers who are in distress, and how do you help them recover, right? I mean, I think the biggest challenge with, so many of our systems, I think of the criminal justice system, where we kind of punish people because they make mistakes, but we actually don't give them tools to like be any better. And so then we're shocked that they're not, right?
Right.
So I think, for us, it's really about creating this dialogue around this notion of credit recovery and how can we do a better job of people who have fallen off and have been struggle with the financial system, bringing them back. Because a good portion, if you even look at the unbanked population, are people that were formerly banked, right? Who maybe through overdrafts or other things fell out of the system, and then they were recaptured by the Cash Apps of the world and the other kind of peer-to-peer payments. And so how do we create a more inclusive system that we can really focus on the whole consumer in their life cycle of good times and bad?
Yeah, no, it's very noble cause. It's obviously a lot to do, but I think you're on the right track, as evidenced by the fact that it resonated so strongly with the FinovateSpring audience. Again, the company is called Remynt, as Gwyneth mentioned. It is Remynt. You can find their demo video at finovate.com/videos, along with all of the other FinovateSpring videos. In the meantime, I've been chatting with Gwyneth Borden, their founder and CEO. Gwyneth, thank you so much for taking the time to connect with me, and best of luck with all of your ambitions going forward.
And thank you, Greg, both for the opportunity and the platform at Finovate, and even in your amazing coaching in advance. Most people don't know that Greg does a great coaching for all of the companies demoing before Finovate. And I think it's so invaluable, that advice and guidance you provide. So thank you.
Oh, my pleasure. I'm happy it was useful. And that seems like a good place to end it before my ego gets too big. So I'm going to pull the plug right there.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.